My next guest says there's more opportunity now in smaller tech names. Joining me is Brook Dane. He's managing director and portfolio manager at Goldman Sachs Asset Management. He's the co-portfolio manager of the Morningstar 4-star rated Technology Opportunities Fund. They're up 27% so far this year. So, Brook, it's great to have you. It's been the best of times and the worst of times. What do you do now in the world of tech?
Yeah, hi, Kelly, and thanks for the time today. It's great to be on. I think the thing that we're talking to a lot of our clients at Goldman about is the fact that, the indexes and people's portfolios have become so overweight in these mega cap names that they really need to be looking beyond that cohort of companies and trying to broaden out, where they're invested in and where they have exposures to. If you think back to what's driving and what has driven tech over the past 5 years, you've had two big waves that have created this opportunity. The first has been, the ubiquity of smartphones. In fact, I heard a stat the other day that said that, more people have a smartphone in their hand than own toothbrushes. That's created this incredible platform that, lets just, unleashes a whole wave of opportunity and creative energy. The second has been the rise of the public cloud and, pretty well documented how it's impacted the mega cap names. But the platforms that those companies have created have just enabled a whole new generation of software companies to come up around them. And, the cost to start a new company and to grow a business is incredibly, it's so much cheaper now than it ever has been in the period of time. So when we look at the opportunity set, we really just feel like that there's this whole next generation of companies coming up, and people need to be sure that they have exposure to them in their portfolios and, and identify the right long-term disruptive tech stocks that they can own. And drive in their portfolio. So it's a really exciting time. No, and
I love some of the way that you've laid this out. So one of the names, and there's several I want to ask you about, but one that immediately jumps out to me because of what's happening in the news today with TikTok potentially being banned is Snapchat. Yep. Now, Snap is not a name I would expect to be on your list anyway, but is it because you see it as a possible beneficiary of a TikTok ban, or are there other reasons?
So from our standpoint, one of the things that we think about is that actually this idea that TikTok and Snapchat are mutually exclusive or ultimately competitive with each other, we just think that's wrong. The use cases that people are using Snapchat for are much different than the entertainment use cases that TikTok has largely been used by. The demographics are different. One of the things that we like, that Goldman as a team likes about Snap is that, they have this incredible opportunity in front of them to really close the monetization gap that they have between other public, social media companies. And, effectively, they've under-levered themselves to the advertising market. They're fixing a lot of their ad tech and their stack. And we just feel like over the next year, you're going to see a real re-acceleration in their business and them executing at some of these opportunities. So,
and that makes sense. What you're saying, that they're not necessarily competitors. They have different use cases, Snapchat and TikTok. So let me go through some of the other names here as well. Hubspot, Akamai, Adyed, Kingdee, which is a Chinese software company. Why?
Yeah. Well, so one of the things that, at Goldman that we think as well is that not only has tech innovation moved down market cap, but it's also moved globally. And, unless you have exposure to some of these new emerging leaders across the globe, in the emerging markets, in China, in Europe, you're missing opportunity. Kingdee is a perfect example of this, where, they're a SaaS software company based in China providing ERP software to local companies. And, one of the things that has us really excited about this company is it has the best underlying tech stack. It's a very clean set of code base. And, it's a big opportunity. And one of the larger risks in tech right now is the geopolitical tension between the U.S. and China. In that environment, finding a pure play domestic Chinese software company that trades at an attractive valuation that we think is compelling is, it's just a really good idea. At Goldman, one of the huge advantages we have is we have, this global team, and one of my co-portfolio managers, is based in Hong Kong, knows this company exceptionally well. And so he's providing the local expertise to help us have confidence in a company like this to invest.
So my final question to you is, what happens if this big cap shakeout kind of ends and it resumes its leadership, and you're underperforming because you've moved funds into some of these smaller names? I can imagine that would be very frustrating, but you've probably dealt with a ton of scenarios like this before. So how likely are those odds, do you think?
So one of the things we always talk to clients about is moving incrementally, and to, the idea that you're ever going to be able to pick the absolute tops or bottoms in any of these stocks or any of these sectors is hard to ever believe, and no one ever does. So we always talked about people about setting goals for where they want to be and moving incrementally to get there. The same would be true between, allocations between these big mega cap names and some of these new opportunities that we see and think are real opportunities. you want to have exposure to both, and you want to move incrementally in the direction that we're talking about here. So, take your time, pick your spots, and have a plan and stick to that plan in terms of how you invest and, where you're finding these opportunities.
All right, Brook, it's been a pleasure to check in with you and talk about some lesser covered names. Thank you so much.